morning all. Well, great new venue, Gwen. Love it here. I wonder if you're not trying to tell us something. That, if you don't like anything you see here, you can just go up to the tables and put it all on red. I think we can do better. So look, we're a uranium company. We're a spin out of NextGen Energy. We started NextGen back in 2011, discovered the Arrow deposit in 2013, and we're taking that through into development and on into production. That's been a tremendous win for our shareholders, and we're looking to do it all again in IsoEnergy. A little bit about the uranium story. Now, a lot of you will have made money during that last uranium boom from 2005 through to 2007. We see that time coming again, and it's coming right now. We've been in a very depressed environment for the past 3 years. We've seen massive cutbacks in production. We've seen 40% of global production cut back in the past 3 years, and that's now starting to have an impact on prices, right as we speak. So the cost of conversion, the downstream products in uranium conversion and SWU prices have risen spectacularly in recent months, and we're starting to see the uranium price take off as well. We've seen it rise from $17 a pound recently to as high as $29 a pound. It's up from $23 a pound to $25 a pound in the past week, so we encourage people to watch that very carefully. When the uranium price moves, you don't get long to get set in our sector. A little bit about the supply there. As I mentioned, we think that 40% of production has been cut back. We can see another 15% of risk. So when in your lives have you ever seen an industry that's cut 50% of its production and not had an impact on price? So we can see that coming very quickly. Of course, the big cutback we saw was Cameco closing the world's largest mine, the McArthur River mine. That's not coming on stream anytime soon, certainly not, we think, until they see $60 or $70 per pound uranium. So we think there's a real sweet spot coming for uranium. Now is absolutely the time to be looking at our sector. But that aside, you can still do very, very well in a down market. So at NextGen, we did our initial capital raise, our initial financing in 2012 at 5 cents a share. That share price chart shows you some of the key points over the last 5 or 6 years for NextGen. We made that discovery, we put out an initial resource, and the share price went ballistic. We went as high as $4.60 in the worst environment you've ever seen. So we've delivered shareholders over 20 times their money today and upwards of 50 times their money originally in the worst market you've ever seen. So discoveries still matter, and I want you to think about that when I come back to our company. The other thing is the beta potential of the market. So the combined market capitalisation of our sector in 2011, 2010 was about $130 to $150 billion. Today, it's a tiny $12 billion. So the beta potential alone, when prices return to normal trading patterns, is tremendous. So that protects your downside risk a little bit. And then finally, your job as investors is largely done for you if you like the macroeconomic thesis for uranium. 2011, there were about 500 listed uranium stocks around the world that you could invest in. This downturn's been so prolonged and difficult for us that the sector now is down to about 70 names, of which probably 35 would be considered something that you would consider investing in. So your job's very, very simple. You can build a basket of stocks in that of those 35 companies, or you can look to a couple of things, and we'll encourage you to look at IsoEnergy as well as NextGen Energy. And what happens when you get a good bull market in uranium? Well, the returns have been the most spectacular that we've ever seen in our sector, in the mining sector generally, in exploration generally. Rick Rule talks very fondly about this, of course. You can see some of the spectacular returns that the sector can return. You look at UEX down there, 3,420% returns on investment. So spectacular returns. I think we've missed a slide there, but Paladin was, of course, the biggest winner in all of that. Rick Rule was heavily invested in that. That last uranium boom, Paladin went from 2 cents a share all the way to $10 a share. So extraordinary returns can be made in our sector when you get a bull market. So if you like that thesis, you can build a basket of those 35 companies that we talk about there, or you can look at guys who've made a recent discovery, of which there's one. IsoEnergy. So we spun the company out of some assets in the Eastern Athabasca out of NextGen back in 2016. We've raised over $20 million so far. We did a deal with Cameco in May last year. We paid $300,000 in stock and $20,000 in cash to get our La Roque East property off Cameco. We had a drill rig on the ground 6 weeks later, and 2 weeks after that we announced the discovery of our Hurricane deposit. And you can see the core tray there, that beautiful black pitch blende mineralisation, incredibly high grade. If you put that into gold equivalent terms, some of those zones, you're talking about many ounces of gold equivalent per metre. You can see some of the results there, 3.5 metres at 10% U3O8. So some spectacular results have come out of that project, and we're fast proving up a deposit. A little bit about our strategy more broadly and what we're doing. You know, the Eastern Athabasca is probably the most prospective part of the planet for uranium deposits. It's tremendously well endowed. You've got the two biggest uranium mines in the world, McArthur River and Cigar Lake. Now, over in the southwestern corner, at our Arrow deposit, where we've discovered this very high-grade deposit at NextGen, NextGen's building that project and advancing that project, but we've learned something very important there, that basement-hosted deposits can be very large and can have tremendous economics. And this eastern half of the Athabasca, which is arguably as, if not more prospective than that southwest corner, has never been effectively explored for these basement-hosted Arrow-type deposits. So we're taking our IP from NextGen and employing it out in the east, and we're putting our foot on as much of that ground as we can. The other thing there is that the money that was raised around 2007 and 8 went into drill holes, and those drill holes, a lot of them were in that Eastern Athabasca, a lot of them hit mineralisation, and they've never ever been followed up. So we're simply putting our foot on as much of that tremendously prospective Eastern Athabasca and drilling holes out there. And the strategy's starting to pay off. A little bit hard to see there, but that orange zone is our Hurricane deposit as it stands at the moment. We've now defined a mineralised zone of over 500 metres in length. It's about 5 metres thick on average by 40 metres wide. We've done 2 drilling campaigns so far. We've drilled 28 holes. We just very happy to report this week announced a financing. We've raised $6.2 million. That will allow us to put two rigs out there in winter. So come mid-January, you'll start seeing some more very good results from us. And that's key takeaway here is that we're very active. We're drilling in and around known mineralisation, and you can see that on those cross sections there. None of those sections have been closed off, so we'll be looking to drill and try and close those sections off. So whilst you can never guarantee good results, you can almost certainly bet that we'll be getting very good results as we drill in and around those drill holes. So look out for those results as we get going in January, and we're completely funded for that. We won't be coming back to the market anytime soon. Very importantly, NextGen contributed heavily to that raise as well. So exploration vectors, the other thing we'll be doing, we're putting 2 rigs out there. One's doing infill drilling, one will be returning almost certainly some very good results. And then on the other side, we're going to do some exploration work. And you can see here we drilled one hole that intersected some very strong alteration and mineralisation out to the east of the Hurricane deposit. You can see that very big red dot on that map there. That's a prominent resistivity anomaly. We're very excited to get in and test that given the alteration we've seen and the scale of that anomaly. So we'll be drilling in and around there as well, so look out for results there. A little bit more detail on the drill program. As I say, 2 rigs. We'll be looking to drill 20 holes, 8,500 metres. It's about a $2.5 million campaign, so we're very active. Very importantly, the last thing here, our capital structure. We've only been around for a very short time. We've only got 68 million shares on issue today. NextGen sits there with 53%. We've got Cameco and Areva there. Cameco's there for 5%. So our share register is a bit of a who's who of the uranium space. And then we've got very strong institutional support. So for a junior company, our share register looks more like a major company share register. That NextGen support is so very crucial. We raised $3.5 million in a bought deal from PI on Monday in flow-through dollars, and NextGen's contributed $2.65 million in hard dollars to that raise. So I think Scott mentioned, it's good to see the CEO buying stock. I've been buying stock in every raise so far, but very importantly, our major shareholder is buying a tremendous amount of stock. Lee and the team at NextGen are determined to keep their interest above 50% because they expect Hurricane to turn into something massive and something important to the company. So that's a crucial takeaway. We're fully supported by NextGen, and and in that financing front. So there you go. Uranium prices can't stay this low for much longer. They've started to rise. We're only about 18 months into that cycle where prices will start to rise, but given 40% of the world's production has been cut back, we see prices rising strongly shortly. And against that macro backdrop, we're one of the only companies in the world with a very new high-grade discovery, and we'll be putting out very good drill results into that macro picture, into that broader market view. So look out for that. Thank you all for coming out. Have a good day. I hope you see some good stories that you like, and thank you, Gwen, for inviting us.